everybody, it's Boris Schlossberg, and these are the 7 things I learned from the School of Hard Knocks of trading. Rule number 1, always, always, always use a stop. Some of you may know that I'm East European. I was born in Russia. Some of you may not. But the bottom line is that when you're born in Eastern Europe, you generally have to have a very Saturnine view of the world. You pretty much have the following assumption: it can always get worse. Now, that could be very depressing for optimistic-headed Americans, but it's actually a very realistic way to looking at the markets. You must always realize that the price can move further and further and further against you. Hope is not a strategy. So always, always, always use a stop. As a matter of fact, I borrowed the trick from my friend Anthony Crudele, which is that I always put the stop in first before I put in the target. That way, you never forget what it's all about. Lesson number 2, always have a plan. The way I became successful trading is by realizing that I'm going to be losing a lot, and then asking the following question: what are you going to do after you have a losing trade? I created a whole strategy that basically works on that assumption that I'm going to have a trade, I'm going to lose, I'm going to go back again, I'm going to go back again, I'm going to go back again. So I always have a plan for what I'm going to do next. I think the reason why so many people lose at trading is because once they feel any kind of adversity, or once the market goes against them, they literally don't have a plan for what they're going to do next. And they're like a deer in headlights, frozen, unsure, uncertain, and then ultimately dejected. So rule number 2 is always have a plan for what you're going to do next in the market. Rule number 3, focus on the setup and the details will follow. I think this is really, really important. We spend so much time in the markets worrying about the perfect entry, the perfect exit, the perfect setup on the indicators, the perfect combination of every single factor, the proper drawdown, the proper risk-reward ratios. None of that really matters. My partner trades continuity, and she trades it basically by cutting short any trade that goes against her. I, on the other hand, am a counter trend trader, and I basically trade every single trade with a hard target and a hard stop, and I never change those. Now, those rules didn't come out at the beginning of when we started doing our strategies. They came out only at the end, after we've done all the big ideas and we've really done a trial and error and let the details come out naturally. So don't spend too much time on details. They'll bubble up naturally as you trade. Have the big idea and then follow that and then go on from there. Now, rule number 4 is probably going to be very controversial with many people, because I'm going to say something that I think is not conventional wisdom. Generally, sort of the very middling conventional wisdom is, oh, have a moderate amount of leverage. This way you have some upside potential, but you're not going to over lever yourself too much, and you'll be in good shape. You know, moderation in all things is always seems to be a good rule for everything except markets. In markets, it's a game of extremes. And here, I think you can only win by 2 ways. You either trade like I do with ultra, ultra, ultra low leverage. I actually start under levered before I get larger into my positions. And that way, I give myself ample amount of room to succeed in my highly probabilistic setup. Or you trade the other way, which is you trade with very high leverage and hope that you hit 3, 4, 5, 6 consecutive winning trades, and that's how you double up your account. I really don't think you have the middle ground, because the middle ground essentially doesn't give you the freedom or the amplitude to ramp up leverage when you need it, and also doesn't give you enough of a jump start at the beginning to really make it more meaningful. So this 50-50 solution is not the right one, in my opinion. Either go hard and expect to lose it all or win it all in a very big way, or go so small and so low that it almost seems comical, but that is really the way you win. Rule number 5, I think, is a very interesting one. Anthony Bourdain, who was a great, great travel writer, used to always say, be a traveler, not a tourist. And what he meant was that engage yourself in the place you go to. Go see the culture, talk to the people. Don't stop at a McDonald's in France. Have a patisserie. You know, when you're in Morocco, have the local food at the market. enjoy yourself, and seep yourself in the place you're at. I think that's a great advice for travel, but it's also great advice for trading. Very often, we're sort of given somebody else's system and we're told, here, this is the best, just trade that and you'll be fine. And that never, ever works, because every single system in the market has to be made your own. You have to actually feel it, try it, be a traveler. Don't just take the directions or instructions that's given to you by a tour guide. Go off the beaten path. Try different variations of the system. Everybody in my room who trades much better than me, and most people do, pretty much take my ideas and very much change them to their own ways. That's the key to trading. You have to make it personal. You have to engage yourself. Be the traveler, not a tourist. Don't take instructions. Rule number 6, I think, is very interesting too, because this is something that we tend to unnecessarily hurt ourselves with. If you're day trading, very, very often you wind up doing something called trading your P&L. You basically say, oh, I want to make $100 today. I want to make $500 today. I'm going to make $1,000 today. That's my target for the day, and that's what I'm going to do. And you either achieving that target and you're feeling good, or you're underachieving that target and you're feeling a tremendous amount of stress, or you're overachieving that target and then you're kind of giving it back because you get a little too cocky. That is a really, really, really dumb way of looking at the market. You can never measure yourself on the time frame that you trade on. So if you're like me and you're day trading the 1-minute chart, it absolutely doesn't matter what you did today. You have to measure yourself at very minimum on what you did this week, and perhaps even ideally what you did in a month. So, and if you are swing trading, it absolutely doesn't matter what you did this week or even this month. You should measure yourself on what you did this quarter. And if you're an investor, it absolutely doesn't matter what you did this year. You should measure yourself on a 3-year basis. The moment you extend your measurement, your performance time by 1 or 2 periods above the trading time that you're on, you give yourself enormous amount of psychological freedom, and you actually perform so much better because you're not measuring yourself against a very tight artificial time frame. And my final rule is, I think, something that is utterly overlooked, especially if you're day trading, which is the tiniest, teeniest, weeniest of improvements can have massive positive effects over the long run. A very simple way to think about this is if you just add 1 extra pip, just one extra tick if you're trading futures, 1 extra point, 1 extra penny if you're trading stocks, to your take profit, and you're day trading and you do 2,500 trades a year, you've effectively increased your performance by 25% if all of those numbers hit. Now, of course, not all of them are going to hit, but the point is that even if you took like half of that return, you've made yourself 10% better without doing anything differently. Now, clearly, there's a fine line between being too greedy with your targets and being just optimal. But that tiny little addition, which generally isn't going to make any difference in your win-loss accuracy, especially if you're trading like I do on a 1-minute charts, makes a massive difference at the end of the year. And that's something I think is utterly overlooked. You don't need to be great. You just need to be tiny bit better over and over and over again. And the compounding effect of that is going to produce massive returns for you for the rest of your life. I hope you guys enjoyed my 7 rules from the School of Hard Knocks. As always, come reach me at bkforex.com. Come trade with me live every single day. I do it twice a day now, both in New York Power Hour from 9 a.m. to 10 a.m. every single day. We trade indices, crypto, gold, and oil. And then I repeat the whole thing. We trade the 8 p.m. hour of New York time for the Asia Power Hour. And everybody in Asia joins us. And we trade indices, crypto, gold, and oil all over again. So I hope you guys to see you in my room. Everybody enjoy. Have a great new year. Boris Schlossberg, over and out.